Hey, welcome back. I wanted to take a few minutes today to show you how to go through a Forex pair or any market and find and identify key support or key price levels using different methods such as support and resistance, supply and demand, local structures, Fibonacci's, and anything else that we can use to identify market turning points and key price levels. So we are here on the Aussie US dollar for our chart as always, and I will just map out a few levels and then we will go forward and see how we can use such information to make sense of the market. So obviously here, when we look at just the pure price action, we have a support level here, 1, 2, 3 touches, here very nice rejection, 4th touch and then the break. At the same time, this is what I have shown a few times already, is that conventional technical analysis tells you that the more often price has moved into a level, the stronger it is, but this is absolutely not true. You can see here that here we had the first touch, second one, and by then many people will probably be aware of this level. This one, then very nice reaction, and every trader or all traders who have not noticed this or haven't been in this trade, they will then wait for the next touch, which happened here, and then you can see price moved a little bit away from it. But what happens? Price broke through this support level very strongly and then started to trade lower. So this is the first good lesson, is that the more obvious a support or resistance level is, the more likely it is to break eventually, because if everybody is trying to get in the same trade, it is very easy for the professionals and the big money to drive price against you and to use this information to trap everybody on the wrong side. At the same time, we can see here price is making lower highs, and each time price came back into this level, it bounced a little bit less. Here it is very obvious. In this move, price made a higher high here, and then on the next one, even a lower. Price came in very short, very small bounce before we then sold off. Then to the upside, we have a few interesting support resistance levels that we can draw. Here obviously is one. This is more of a zone than just a regular level. So when we start here on the left and then draw it going forward, we can see here support resistance area, support, then here a little bit of support before then price sold off, retest as resistance. Here some type of retest came a little bit short of the actual level, but that's why we use zones instead of just pure levels. Here a fake breakout, which probably caught a lot of people on the wrong foot who were expecting the breakout, and then price started to sell off here after this failed breakout attempt. And then very nice structure here to the bottom. We can also use our RSI here, and now we can see that price is trending lower. We are not seeing a very strong trend, although price is making lower highs. At the same time, price is showing us a divergence here on the RSI. It is not enough to get us into a trade yet, but something to be aware of. But here again, we don't need the RSI typically, because you can see already that although price is moving lower, the swing lows are becoming smaller and smaller. Price is just barely able to make a lower low, and then it continues on. Here then we have a little breakdown, a little bit stronger than what we've seen here. And then here price is making another double bottom. And this double bottom even comes with an interesting fake out here. And the fake out here shows that there was a drive lower, but then price rejected the lows. And you can see here when we go forward that this candle shot up a little bit, and then this downtrend here did not continue immediately. So you can see we are putting in also a nice double top here, or a triple top even, when we look at this local structure here. Again, if we would draw a zone, then we could capture all the price action, and just using a level is not enough. So when we use the zone, we can see that we can capture the high resistance and the resistance again. And what happens then is another classic squeeze here. When we look a little bit closer, you can see price has even closed here below the previous lows, but then immediately reverses back to the upside, and we are trapped here again in this. So now again we have this very important support level here, 1, 2, 3, 4 touches with this fake breakout. Probably everybody will be aware of this now, and you can imagine that everybody wants to trade a new bounce of it, because you can see all the time we had a good reaction of the level. And as we said previously, if the level becomes too obvious, it's probably always best to stay away and wait until the level is broken. So you can see this happened here very nicely. Oops, sorry. So when we go here forward a little bit, you can see price moved into the level. We had lower highs, just like what we saw on the previous break that we saw here. Price broke the level, sold off immediately, and started a downtrend. So you can see here now that this support level has been broken very nicely. Lots of volatility, momentum to the downside. We have a strong reaction point here at this bottom of this wick here. This was probably caused by a news spike or news event. And then price is trading into it. You can see price is still well below this 20 SMA that we have here. So the trend is down. And now we can see the very nice trend structure. Price is making lower lows, lower low, at the same time lower high, lower high. So we have 3 lows in a row, which is a good trend structure. And then suddenly price breaks this 20 SMA here and is rallying to the upside. So there's probably not an RSI divergence. You can see here that price is making lower low, and also the indicator is making lower low. So this is a good or a valid trend structure. Then price is moving back into this 20 SMA here very strongly to the downside. Here is probably something like a small demand zone in this level. So we can use that information here, and draw our little demand zone. And now you can see here price came a bit short of this, but we are moving up here. You can see this candle very large. It is testing the previous swing highs. You can see here very nice support resistance area, or actually it's just a resistance. So if we count that as the first touch, then here we have retested it as resistance, again retested as resistance, and now price has spiked into it, found immediate resistance here, but this spike is very strong. And at the same time we can see that we are seeing something like a head and shoulders, left shoulder, head, right shoulder here, this one. And when we go forward, you can see price is showing a lot of volatility here in this area, but this is a strong resistance area, and this could have been expected. So when we go forward a little bit, then you can see that price is now even staying above the 20 SMA. So this is a very good confirmation that you can probably expect to see more moves to the upside. And then price is still here above the 20 SMA, which is a good confirmation. And this is a classic reversal that we always trade here on the Tradeciety channel. So let's see, again, very nice rejection on the 20 SMA. The trend is still valid. Here price broke the 20 SMA a little bit, but you can also see that where price found resistance is at a local structure. So previous swing high here is something like a reaction point. If we extend it a little bit further back, you can see here price bounced in this level, sold off, moved back into it, had a lot of volatility in this area, came back to retest it as a resistance, and now price has found a little bit of resistance. It is nothing major yet. It's not showing any signs that we could see another run at this level. Also, we can probably expect to see more short-term volatility going forward. We can also extend our levels here a little bit. We can also extend this level here that we have from our previous drop, and now see what is happening. That's the resistance test that we saw. We closed below the 20 SMA, but it's not as strong. And then you can see here a major candle. So probably a lot of people were expecting a reversal at this point, and then boom, we shot up higher. Very strong candle right in this major resistance area. So you can see that was the first area here that we got from these levels. And then remember, this is the strong support level that we had previously here, also with the fake breakout, and then this retest pattern. And now price has spiked into it, and you can see price is making another run at this high. So this could become a squeeze top if price is not able to break above the highs here. So let's see what happened. Very interesting. So you can see here this complete wick got covered here, and then even we closed above this support or resistance area. We did not break the highs here with a close, and then immediately price and momentum to the downside is picking up. So this is probably going to set up an interesting short opportunity if price can make it here below this 20 SMA. And this seems what is happening. So we can also draw here our support area here. And remember that we are always looking for a market or a trend change that is going from higher highs and higher lows to lower highs and lower lows. And in this context, we will get a short opportunity if this low is broken, because then price is confirming that it is able to make lower lows. And this is happening with this candle. You can see it here very nicely. Closed below this low here. Very strong momentum as well. We had seen a few candles now red. Just this one little green candle was able to consolidate here or range at the 20 SMA, but nothing that shows any signs of bullish opposition. So this could set up as a very interesting short opportunity. If we look here left to the downside, let's get rid of the head and shoulders for now, and this one. So again, what we're always looking for are targets, and those can be order blocks. And I have another video if you don't know what order blocks are. So basically you look for those bottom patterns here, very clearly defined range to the upside and to the downside. Even here a confirmation that this is a valid order block. Price dipped into it and then immediately sold off. So this is our order block, and if price can continue its downtrend, then first it has to take out all those local structures, the local lows. So here is one, this is one, this is one, but the major area would be probably or can be expected around here. So let's see what price does. And you can see here price is well below the 20 SMA, a little bit of a retest here, but this is a very common pattern. So everybody who is looking to short this or has shorted after the break of the moving average here is probably looking to pull their stop loss orders at one point, and such a squeeze is then very common. And now very nicely we are seeing the stepping behavior in the opposite direction. Lots of red candles here. The red candles are much stronger than the green candles, much longer as well. Just a few very tiny bullish candles. Here a little bit of a larger pullback, but nothing too worrying yet. And you can see that we have probably now almost reached our order block that we drew. So let's see how far price can actually sell off. And very interesting here, price dipped into it, found immediate support here at this double bottom, and is now making a larger move to the upside. So here it's early reversal pattern. Keep in mind we're still well below this 20 SMA, and we could just as well see another move lower with a bigger retracement. And you can see here price is trending sideways. So this is an important pattern. This does not mean that price is breaking the 20 SMA, although it looks like it. But what actually happens is that price has traded here 1, 2, 3, 4, 5, 6, 7 candles sideways. And in that time, the moving average came lower to meet price, and it was not price that was coming higher to shoot above it. So this is a common pattern and something that you should be aware of. So a little bit more ranging, and now price is picking up downside momentum again. Very large candle. It is engulfing all the previous candles. So this is still confirming the short bias here, and you can see here price is picking up short momentum, and we are seeing a very interesting squeeze or trap pattern, whatever you want to call it. And if we take the low from the previous drop here and we extend it, then we can see that price barely reached it. We overshot it by a little bit. So what happens is probably a lot of traders wanted to trade the long reversal here at this area, especially after they saw this large turnaround, and then price moved a little bit in their favor. And what do? You pull your stop loss to break even, and such a spike here or such a squeeze has the goal to shake out all the traders who are positioning too early or who are in the trend or in the trade too early. And a very common pattern here, such a trap pattern. So let's see what has happened. You can see here now we have also a nice double top here or a multi-top. And again, just like we saw here, this is now time to exit any short trades because price is trading in this range. If price continues to move higher, breaks above this area, you can initiate a long trade. And if price would make another run at the lows, then you can think about going short again. And now let's see what happens. So we are now seeing this green candle here on the right hand side, which has broken or barely broken this 20 SMA. It's a little bit early, so let's see what happened. You can see this candle, which we didn't see previously, has a very nice wick to the downside. So this came back to retest this area here, confluence area, and then shot back up. Not enough selling power to drive price lower. And price is now hovering between this area and this 20 SMA. And now we have this confirmation bar here, which is showing the accelerating momentum, just like what we saw here with this larger green candle, is that price is now able to break higher above this 20 SMA and above the previous swing highs, the resistance area. And now let's see if we can get another run. Let's take this off for a second here on the left hand side and make a little bit more room. So let's see what happens here. Price is coming back down into the area, nothing worrying yet. We are still in this major support resistance area. The 20 SMA is now flat here. Lots of volatility around this moving average, but it's not going against the trading idea yet. If you went long here after this one, you probably would have your stop loss here below the previous origin of this uptrend here. So let's say if your stop loss is here, you give it a little bit room, or what I call padding, and this protects you from volatility, just like what we are seeing now. So let's see what we can do here. And price is, or seems like it's picking up momentum to the upside again. Here we have our previous swing high again. And if you get taken out by such a move to the downside, such a volatility spike, then you can use the previous swing highs and lows to time re-entry trades or re-entry opportunities. And now you can see that price is actually making here a higher high. We broke above this area. We closed with a very strong bullish candle. So let's see. You can see here a few range bars, and then suddenly we are spiking higher into this area. And a very strong momentum and another green very large candle. So you can see here that price is now following this new trend pattern where we make higher highs, the first higher high, second higher high, third, fourth, and now the fifth. And at the same time we are making also lower higher lows, and this is confirming that the trend is shifting. You can see this price is now running into a little bit of a problem area when we draw it here. So this is the low we had previously. It acted as some resistance here on the break and retest pattern, and obviously here is a lot of supply demand in this area. Although it's a little bit large to draw this as one support resistance area or one demand or one supply area, I would probably go here for the origin of this level or this zone, which is this large turning candle here. You can see after price moved higher, we had the smaller green bar here, which showed that the momentum is not confirming the bullishness, and then also here that this large turnaround candle is very is giving us information that here in this area, especially at this top, which we also have previously seen as a major reaction point, here with this long wick has come to an end. We retested it here with this market top. So if you want to draw a supply zone, then you can use that information here, large candle, then this huge reaction point, and let's see where price is moving now. You can see we have dipped into this zone. So if you want to be on the safe side, you can take your profits. If you want to be a little bit more risk seeking, then you can use the 20 SMA as your trailing stop loss and stay in the trade. You can see here price dipped lower, it pulled away from the 20 SMA here again. We are now seeing another higher high, so this trend structure seems to be still working. Let me get that. Okay, so you can see the previous swing high came to an end here right at this supply zone, and now price is shooting higher. It is going for the highs here of this previous market top, and we are still well above the 20 SMA. And now you can see that price has shot above this area. We are pulling away from the 20 SMA in a very strong way. So let's see here where we're going. And now we are moving back into 20 SMA. You can already see that price is now retesting the previous swing low. This last candle here had a very, and sorry, this should be straight, but it's not that easy here. Okay. And so this previous swing low here, if you want to call it that, is now being challenged with this candle here. If we look a little bit closer, you can see that there has been a lot of volatility. This candle has two large wicks to the upside and to the downside. So you can expect to see a little bit of, so we can see that the market is putting in early warning signals for a top and a potential market top. So let's see what has happened after. And here, very classic. We are now moving into 20 SMA here with this candle. We broke and closed below this previous swing low, and now one doji bar and one candle that is going to the downside. So this looks like price is now making a run at this or is trying to recover some of the previous strengths from this bullish rally. So here is an interesting level, major supply area that we have from the green one, previous swing high. So let's see if price can make it here. A long red bar is confirming the downside momentum, and price is or has actually moved into this area, and we are now trading at it, and we are making another run here higher, and we seem to have found support. And as you can see here, we can do this game forever. You just use the concepts of higher highs, higher lows. You look at how price behaves, or how the candle close and open especially behave around previous swing highs and lows. You look at the wicks, how volatility manifests on your charts. Once you're in a trade, you can use the previous swing highs and lows to get idea and to get information about momentum. You can use the 20 SMA to stay in a trade. You look left for key price turning points. You look for support resistance areas and supply and demand areas. And then you also look for fading momentum, such as RSI divergences, squeeze patterns, traps, and anything that can help you understand how traders are positioning themselves, where they run into problems, where their trades or their orders are being challenged. And this is a great approach and a good way of analyzing and looking at the markets. And it works across time frames, across markets, and it's just a general way of understanding price action in front of you. I hope you enjoyed this video, and if you like it, give me a thumbs up under this video on YouTube. And if you have any questions, just leave a comment down below, and I'm very happy to help you out.